We are live. Good morning, stalkers. It's time to rise up. It is Kelly Michelle here with Stock. And before we get started, I want to make sure that you are following me on Instagram. I am listed right here, Stocks on Instagram. Just search that and come through and find us on Instagram. We put good tips out via the stories all the time. So a lot of stuff is shared on both pages, Facebook and Instagram, but it's really good to be linked up everywhere. Alright, so make sure you follow me over there when you get a chance. I want to say good morning and to talk about a couple of things that I noticed yesterday and going into Thursday. Well, Apple reported their earnings. Let's go to Apple first. And they fell short of what was anticipated. Like I said in my training I had earlier this week on Monday, these things are going to happen. It's actually more common than not to have these earnings being reported falling short of what's expected, just because of the pandemic and everything that shifted the money and what happened with that. So companies are still trying to bounce back, even the bigger companies. Okay, so here we go. Apple fell short, and as a result, their stock price went down a bit. I have positions in Apple, and I'm thinking that it's a good time to get some more positions in Apple, some more shares in Apple or partial shares. Now, if you see right here, I'm in Yahoo Finance, the analytic tools. They're listing it as overvalued, but this is a tech stock, and usually tech stocks can take shifts because they innovate. So, you know, these analytics are based on the average everyday, what's going on right now, what you see right now. But anything can happen with tech stocks. So they are analyzing it as being overvalued, but we can also look at it as being a stock that is, you never know what they're going to invent. You know, so you want to, when they are discounted, you want to try to take advantage of that. Now, I'm scrolling down here so you can see the recommendation trends. And I like to look at this, but if you look here in the green, this is showing that here in November this month, 21 analysts are saying that we want to go ahead and pick up Apple, some more of Apple right now. 11 people are saying it's a strong buy. Okay, and these analysts are highly recommended, and they've been in the game a long time. And of course, you don't have to go by what they say, but it's just a good tool and something to see, and a good starting point. Okay, so I take that as that might be a good buy, because it's not something that's going to just go away. Okay, this one is looking at a target estimate price for 1 year if nothing changes, if everything stays the same, if they don't innovate or something else pops off with Apple. $124.81 a share. Okay, so right now it's at about 118.61. Okay, here we go. 118.03 after hours. So they're saying it's a possibility it could go up to 124 within a year. But again, that's a tech stock, so you can't really, you have to kind of take a risk on those stocks. Alright, so Apple, I'm going to definitely pick up some of that because it's discounted. The next one I want to look at is Aphria, just because I have shares in it, and I did a whole video. AJ is the ticker. I did a whole video on why I purchased this stock, and the video was explaining why I did it, because it had took a dip after the elections. So what we're looking at right now is this is a cannabis stock, and cannabis stocks are similar to the tech stocks in that anything can change. You know, the numbers are quoted based on right now, right here. But anything can change with that. We don't know what's going to happen with the laws. So we have to just keep our eyes on that one for my cannabis stock investors. So you're seeing here that this one is fairly new. I did some deep research on it, and I entered into it. Wait, I think I got it pulled up over here. Yeah, that's it right there. This is it right here. So 12 shares at $4.44. So right now I have an increase of about, we're looking at 22 bucks. It's gone, it's taking big dips and everything in between, but I have this stop loss on here. See that? That stop loss, and I'm going to do a whole training on this. When I entered and it was $4.44, I put a stop on there saying if it goes down to $4.01, cash them out and pay me. Give me my money. Okay, I'm not worried about the target. I just put it highlight that just because, you know, I kind of wanted these to sit here just to ride the wave to see what's going on with the cannabis stocks. This just seemed like a good one to enter. It's very interesting. I'll share the video in the description area of this video. So anyway, you see right here, $22, and that's including what I've lost and what I've gained since I entered into this position. Now that's the thing. The thing is that you're not going to get a 42% return by just putting your money in a bank in a savings account. Not even for a whole year, because the percentage return on that is about 1%. So you're looking at what, 40 years? You know, so we're not going there. But this is just showing you, if you do your research and look for stocks in a certain way and really strategically plan this out, you can really get some good returns here. The thing is that you have to be willing to take risks, not just risks where you're just gambling, but risks that include some dedicated research in the company that you're investing in. The last one I want to look at is Microsoft. I'm going to add to Microsoft because they took a deep dip today. They underperformed all of the stocks in their industry, which is odd because their earnings reported were good. You see here, their last earnings they reported exceeded. Okay, so they were thinking about 154, that it exceeded that to 182. So even with that, this stock has taken a deep dip. There it is. It's in the red. And it's down 1.32%. Now we have researched Microsoft, and we know that this is a good company. They're saying that the stock price, the share price is overvalued, but what? It's a tech stock, so risk is included, and we can't just end it because it's saying it's overvalued here, because they innovate. Any one of these companies that innovate, if you want to take shares in them or invest in them, you have to be willing to take a risk, because that's where, because you know, the bigger the risk, the bigger the reward. But you have to do your research to make sure you're not just jumping in anywhere. Okay, so Microsoft, I just want to scroll down here. and show you that there's the green analyst in the recommendation trends saying buy. The strong buy though up here, 14 in November. So it's highly recommended by the analysts here to put some money on Microsoft while that dip is down based on their numbers, analytics. They are a good company. They're estimated to be at about $239 a share in 1 year. You see where they are now. So again, if you ever want to question when one is close to being overvalued or they're in the fair value bracket, you can always consider, one, is this a tech stock? Okay, yeah, I have to, have a little bit more leniency. I gotta be a little bit more open with what I'm gonna do with this one. So yeah, I just wanted to share that with you guys. I want to thank everybody for coming over here and liking my new page, Stalk Stocks. Keep riding with me. It's gonna be a long ride because you can never learn enough with this. But it's gonna be a good ride because it's a lot to learn and a lot to know. But we're gonna get this. I hope you're ready to come up. Until next time, stalkers, take it easy.